So thank you very much for those of you who are joining us, and for those of you who can't join us right now, we're going to have the replay for you. Will Farnell is my accountant. We've just been chatting. He's been my accountant for 10 years, and as I was saying to you, I wonder, Marissa, why you're still the main focus. Will, if you speak, will you?
Yeah, does that help?
Yeah, there we go.
There you go.
So yes, Will has been my accountant for 10 years. I've seen him go from a one-man band into, as you can see behind you, he's got a big office in Norwich, in Norfolk, where I'm based, and spend time in London. You've also got an office down in London. He's very entrepreneurial. He's unlike most accountants that I know, who is always thinking about and understands what it's like to run a small business. So he had put together, the team had put together a really useful email saying, look, at the moment, this was a couple of weeks ago, I think it was, Will, this is what the government is saying, this is what the support is. And I asked my community, would they like a copy of it? And so many people said yes. I thought that actually it would be really great to get Will on, and to sort of share what he knows about what the government's supporting, where the gaps are, and answer any questions we have. So please, Will, we would love to learn from you.
Fab, thank you. So I will share a screen first of all, because it will make sure that I don't forget anything. So hopefully everybody can now see my screen. So we are going to run through, I'll give a brief introduction on who I am. I will spend about 25 minutes talking through the government support measures that have been announced so far. And in doing that, I'll also flag some of the obvious omissions and talk a little bit about what I'm doing and what I'm urging my clients to do in terms of trying to tackle some of that. So I'll then talk about how I can help, and we'll have some time for questions and answers. And as I said a moment ago, my diary is very clear at the moment, so I will spend as much time as we need to help answer those questions. So as Bridget said, my name is Will Farnell. I set up my firm Farnell Clark in 2007. We've grown very quickly. We're about 50 people now. We have 3 offices around Norfolk and Suffolk, and we have a base in London near Liverpool Street, where we service our London-based clients. We are tech advocates. We were probably one of the first, what we would refer to as 100% cloud practices globally back in 2009. So for the last 10 years, at least, all of our clients have used cloud-based technology to run their business. We understand it, and I spend a large portion of my time now working with other accountancy firms, helping them understand how to use technology to deliver a greater client experience and so on. But focus today is with me firmly with my accountant hat on and talking to you about what government is doing in terms of financial support for businesses. Feel free, if there's a desperate question, to dive in, but Bridget did say there is a chance that I'll pick it up later, so make a note of it and we can pick up those at the end. So I don't need to say we're in a really tough time right now. Nobody's seen anything like this in their lifetime, and the likelihood is that we probably won't see anything else like it again. There's lots of terms that are being used very widely at the moment. Unprecedented is one of them. And as a result of that, government have issued directives to say that businesses have got to close, and that naturally has a huge impact on the economy. So what the government has done is it's tried its best, and I applaud the government for the things that they have done. It's not perfect by any stretch of the imagination, but if we think about what they've done in a matter of weeks, it's quite impressive. But that's not to say they've solved everybody's problems, and the reality is they probably won't. But some of the things they have done. So I'm not sure what the mix is here. Bridget said there's a mix of people with limited companies and sole traders and so on. So I'll try and cover everything off, but we can drill into any details towards the end. So firstly, if you are VAT registered, the easiest cash flow pressure reliever right now is that if you have a VAT bill that is due from the 7th of April through until the 7th of June as VAT due dates, those VAT payments can be deferred. So what that means is you don't have to pay them yet, but they will have to be paid based on current guidance by the 31st of March next year. The key thing here is when the government first announced this measure, there was a suggestion that you could leave your direct debit and the government wouldn't claim the direct debits. They've now U-turned on that and said if you have a direct debit in place, you need to cancel that direct debit. If you don't cancel the direct debit, then the payment will be taken. Now, it may be that you've got the cash in the bank and you think, I'd rather not defer it and have that liability to worry about further down the road. So if that's the case, leave your direct debit and payments will be taken as normal. If, however, you want to preserve that cash, then please go onto your bank and cancel your direct debit, or the payment will be taken on its due date, which is normally around the 10th of the month if you pay by direct debit. So VAT is a big chunk of money for many people that are making taxable supplies. So a very quick and easy way for you to preserve cash. Second one, on a similar basis, self-assessment payments on account that are due on the 31st of July, either because you're self-employed or you run a limited company and you take your income by dividends. The likelihood is you will have a payment on account and you make self-assessment payments in January and July. If you're due to make a payment in July, that has automatically been deferred. So what that means is you don't need to make the payment by the 31st of July, and Hmrc will not charge you interest on deferring that payment. So again, we're pushing the pain down the road here. We need to be very conscious of that this isn't stuff that's just going to disappear. We're just kicking the can down the road a little bit until January and March next year. But again, that might be a few £1,000s for some people. So it's again a fairly immediate cash benefit, because if you've saved money up for that payment on account, you can now use that as a short-term plug whilst you wait for some of the other government funding to come through that has been promised. So they're straightforward deferrals of liabilities, nice and easy. Businesslike holidays. So if you are in retail, leisure or hospitality, your business rates have been removed for the next 12 months. So for the 2021 year, so payments that you would ordinarily make from April through until February, possibly next year, if you fit the criteria of retail, leisure or hospitality, you will be business rate free. You'll know if you get that, because in theory you should have got a 1/3 reduction on your rate bill last year based on the 2018 budget. Equally, if you pay business rates, or indeed you get small business rate relief. So this one's confused people a little bit. There's two elements to it. So the first is that if you have business premises and you qualify for small business rate relief, which means your rateable value is below £15,000 a year, that's the rateable value, not what you pay, you will get an automatic £10,000 grant paid by your local authority. What we're seeing already is that some authorities are working much faster than others. We have a client that is based in Suffolk. Ipswich Borough Council have already paid grants. North Norfolk District Council, which is the authority that Bridget and I live under, still haven't even got the form on the website yet to enable people to make the claim. So there's huge disparity between the speed at which people are paying this. The business secretary emphasised in the daily briefing yesterday that local authorities have been given the money, so they're sitting on the cash. We're just waiting on them to disperse that cash to people that need it. So regardless of what sector you're in, if your rateable value is below 15,000 and you are a rate payer, whether or not you pay it or you get the small business rate relief, there is a £10,000 grant. If you are in retail, leisure and hospitality and your rateable value is between 15,000 and 51,000, you are eligible for a £25,000 grant. So again, if you qualify for the rates holidays, you will also be entitled to the £25,000 grant. That requires a very simple online form to be filled in. I refer back to my previous point that it's dependent on the local authority making the form available to fill in, but some authorities have already got those forms on their website and are making payments of that £25,000 grant. So I appreciate that certainly the 25,000 and the Businesslike Holiday does currently only apply to businesses in retail, leisure and hospitality. More generally, HMRC time to pay support. So if you have an HMRC liability, whether that be PAYE, corporation tax, self-assessment, VAT liabilities that you don't defer, after the credit crunch in 2008, HMRC launched a time to pay helpline. We have seen already that HMRC are being incredibly helpful on this helpline. We have clients that are getting 3-month deferrals for PAYE liabilities. So depending on the size of your business, our PAYE liability is kind of £18,000 a month in terms of what we pay to HMRC. So the flexibility to talk about deferring those, again, we're pushing stuff down the road, so be very careful of that. But until you start to get payments of some of the other things like the job retention scheme money, it's an immediate cash flow support for you. So call HMRC time to pay. The key when you call time to pay support is be really, really clear before you make the call in terms of what you're asking for, what you can realistically do. It's much easier to ask for 6 months and backtrack to 3 than ask for 3 and HMRC say, yes, that's absolutely fine. And then you kick yourself because you could have asked for 6. So take some time to think about what the impact is and what you can realistically do, and be prepared to kind of negotiate a little bit. So start with a bit more than you'd actually like to end up with, because you might just be surprised. So then we start getting into the more complicated areas. So first of all, the coronavirus job retention scheme. I'm sure all of you now know a word that perhaps you didn't know before. It's furlough. And what this means is if you have employees, you have the option to furlough your staff and claim 80% of their salary from HMRC. So the immediate challenges with this is that the way that you're going to make that claim for your employees' wage costs is through an online portal that HMRC are building. Now, if any of you have worked with government IT projects before, you know that sometimes they don't always go quite as well as they hope. And the expectation right now is that the portal will be available for claims by the April. So we're still 3-4 weeks away from that. If the portal is available for you to make the claim towards the end of April, the reality is it's going to be into May before you receive any money. So many businesses will already have had to pay March salaries, and the likelihood is they will also need to have paid April salaries before they have any chance of getting the money back from HMRC. This is where the VAT deferral, the self-assessment deferral is intended to help, because it provides some cash flow for you to make those payments whilst you wait for the funding to come through from HMRC. So the challenges with furlough is that the employees are not allowed to work. They are allowed to do training, they're allowed to do voluntary work, but they're not able to do anything that is related to continuing to run your business or income generating activities. I'll talk a bit more about limited company directors in a moment, but the limited company owner managed business is the biggest single area of people falling through the cracks. And there's been huge debate about whether a sole director of a business can genuinely furlough themselves. The government guidance now is that they believe that we can. The challenge is, though, if you choose to furlough yourself, you're mothballing your business. You're kind of putting it in a box and saying, right, we'll open that in 3 months' time. And many of you, if you're running a limited company, will probably be taking a fairly low salary and potentially taking income from dividend. So if you get 80% of £8,000 or £9,000 a year, it's not a huge amount of money to have to stop doing anything related to your business. But we'll come back to that a bit later on. But initially, if you have employees, you have a choice and an option to say to them, we need to furlough you. We're going to pay. The government is going to pay 80% of your salary. You as the employer can choose to top that up to 100% if you want to, but you're not under an obligation to do so. So you pay the 80% and the government will refund you 80%. If you choose to pay 100%, the government will still only reimburse you the 80%. So it's a tough one, but depending on the nature of business you're in, if you've got employees that are struggling to work from home, you've got employees that can't work from home because of childcare, or because of looking after relatives, or if you live in Norfolk, broadband challenges, whatever it might be that means people can't be productive, then the suggestion is furlough them, don't make them redundant. The whole point of this scheme is to ensure that we're protecting jobs for when the economy sees an upturn further down the road. I'm sure there's going to be some questions on furlough, so I'll stop there on that, and we'll pick some questions up when we get to the end. One of the most recent announcements was around self-employed. This was announced by Rishi Sunak on Friday, I think it was, from memory. It's helpful, but it's controversial, primarily because of the proportion of people that are excluded from it. So what do we know about it? So if you are self-employed, and this means specifically you trade as a sole trader or as a partnership, limited companies are explicitly excluded. So again, we'll come to that in a moment. So if you're a sole trader or you work as a partner in a partnership, potentially you are able to get 80% support of your last 3 years average income. Now, there's criteria around that. Your average income over that period needs to be less than £50,000 a year. If it's £50,100, tough luck. You're not getting any support. What is really frustrating is that the government said that this support package covers 95% of the self-employed. And their rationale of ignoring the other 5% is because the average income of the 5% is £200,000 a year, and therefore they don't need the support. But what it clearly misses out is that that's an average. So how much of the 5% is earning that level of money, and how much of that 5% is actually earning between £50,000 and £60,000 a year, and are getting no support whatsoever. The other challenge is that if you didn't file a tax return for 18-19, which would have been by the 1st of January 2020, again, you do not qualify for support. So if you started a sole trader business on the 6th of April 2019, and you've started really well, your business is going really well, but last week your income was cut off, you will not get any support through the self-employed support package. So there's a couple of glaring omissions there in people that are not supported. The other thing is that if you've got a mix of income, your self-employed income has to make up more than 50% of your total income to qualify as well. So if you have a partner that has a limited company and they pay you some dividends, and you have a small self-employment yourself, and the dividend income is more than 50% of your total income, then you're not going to get support under the self-employed support package to replace your self-employed income that's been cut off. But as I say, the big omission is the limited company directors that are really not employees. They're not subject to national minimum wage. They're officers of the company and not employees, but equally, for the benefit of this situation, they're not self-employed either. Yet if any of you are limited company directors and you've tried to borrow some money, the banks will deem you as self-employed. So it's like we're in no man's land, and unfortunately right now there is limited support available. So that takes us on to you'll see as we get down here, the measures become a little more desperate. So if you haven't got the benefit of you in a property, so you get a grant, you're VAT registered, making taxable supplies so you can defer your VAT, you can't furlough yourself, then what are the options? And the government's intention was that the coronavirus business interruption loan scheme was going to be an option for people. There are going to be some more announcements, we believe, tomorrow, because this isn't working. So the feedback so far is initially the banks were asking for personal guarantees from directors. They've now backtracked on that and said they will not ask for personal guarantees on any loans up to £250,000, but the loan scheme is making lending available up to 5 million. So anything over 250,000 up to 5 million will require personal guarantees. So that's problem number one, because certainly the conversations I'm having with clients is if you're looking at the business loan scheme, you've got to think really hard about this. We don't know what the other side of this is going to look like. We're already deferring liabilities through VAT, self-assessment, and so on. Whilst these loans are 12-month interest-free, we've still got to repay them. And the interesting point is there's lots of talk about these being government guaranteed loans. The really important point here is that the government is guaranteeing the bank. They're not guaranteeing you as the borrower. So you remain 100% liable for that liability. So the bank's first port of call, if anybody defaults, is they go after the lender, the borrower first. If they can't get the money from the borrower, they can go back to the bank to get their 80%. So it's not guaranteed but to you as the borrower, it's guaranteed to the bank. So you're taking on these liabilities. You've got to be really confident of the robustness of your business to get through this and repay those liabilities. Some of the challenges that are already coming up is my personal view is that the government got this wrong. They're blaming the banks, but the reality is it's their own criteria that's causing applications to be declined, because the intention was that this is lending of last resort. So technically, the bank shouldn't be putting forward a guaranteed application if they can support it under normal banking arrangements. So if the bank would ordinarily lend to you, their first port of call has to be to lend to you on their normal conditions, which is where the guarantee stuff comes in. So I think what's happened is the banks are getting a bad press. The government are hearing that the scheme isn't working, but the reason the scheme isn't working is that the government criteria on lending is so very, very tight, which means the banks are just struggling to get these through. So I think what we're going to see probably tomorrow is a loosening of some of the rules around the business interruption layer, which should make it more accessible than it is right now. Don't get me wrong, there is a huge amount of information the banks will ask for. This is not a quick, easy solution. They need to understand that your business was viable before coronavirus. They need to know that it's viable on the other side. They need to know what measures you're taking to reduce your costs and how you're planning for exiting the other side. So lots of work. You need up-to-date management information, financial management information, you need cash flow forecasts, you need budgets, and you need clear explanations around what the money is going to be used for. We've seen already that lots of businesses have debt from people like Funding Circle. The banks are not going to lend money to repay other debt. That's not the criteria of this loan. So you can't look at this in terms of, well, here's an opportunity to get some government-backed money to settle my Funding Circle liabilities at 10, 11% interest rates. So we've got to be really careful, and that's going to have an impact on affordability and what you can borrow. Universal credit changes, statutory sick pay reforms. I'm not going to talk too much about this because genuinely it's not something I know much about, other than what the government are saying, that they are trying to make it easier for people to claim universal credit. it's last resort. I'm sure as business owners, none of us want to find ourselves in a situation where we need to do that, but it's here because right now there is little support for owner-managed limited company directors. The most recent announcements around insolvency rule reform. So up until this announcement was made, there is some text in law that talks about wrongful trading. What this means, if you're running a limited company and you know that you're in a situation where you are unable to meet your immediate creditors and you continue to trade by taking out new lines of credit, you are guilty of what's called wrongful trading. What this does is, in the case of an insolvency, it can remove the veil of incorporation. So what that means is, as a limited company director, you have limited liabilities. So you are not personally liable for your company debts unless you've given direct and personal guarantees around those debts. Historically, if you were found guilty of wrongful trading, you could be held liable for all of the company debts as the director of the company. So what these rule reforms have done is relax that and say that right now nobody can be charged with wrongful trading, because they know that there are businesses out there that right now can't pay their liabilities, but they're going to get support under the job retention scheme, and that money is coming from government, but it's not going to arrive for a few weeks. So those rules have been relaxed a little bit just to help people through. So finally, limited company directors. This is the most frustrating thing for me. I've done lots of research around this. There are 5.7 million small businesses in the UK, give or take a few. Around 2 million of them, so around 35%, are trading as limited companies. So these are small businesses. A number of them, a significant proportion of that 2 million, I think the number off the top of my head was about 900,000, are pretty much one-man bands. They will be trading as limited companies for a number of reasons. The press will tell you all the time that it's tax reasons, but that's not the case. If you're a contractor, you're a freelancer, your clients may insist that you work as a limited company. You might be trading with local authorities that insist you trade as a limited company. So there's a whole load of reasons that people choose that structure to run their businesses in. And right now, we have very limited support because the tax system is built in such a way, by taking low salary and dividends, is perfectly within the laws. We as accountants would be negligent if we weren't advising you to operate that way, because our job is to help you legally reduce your tax liabilities. Yet it kind of seems that we're being punished for taking this approach. So right now we are in no man's land. We can potentially furlough ourselves at the cost of effectively not running our businesses for the next potentially. We can furlough ourselves and take 80% of our PAYE element of our income, and you are allowed to continue to carry out statutory admin. So filing your confirmation statements, paying your employees, paying your suppliers, things that you have to do, but you can't do anything directly or indirectly related to generating income for your business. So it's a real problem. So some of the things that I've done, I put a post on LinkedIn on Friday evening after Rishi Sunak made the announcement. It's had about 160,000 views, over 1,200 reactions, 300 plus comments. I have had direct conversations with 2 of our local MPs. I noticed yesterday the Institute of Directors have started lobbying. I'm working with the ACCA, our professional accountancy body, to lobby government to highlight the fact that there is a significant proportion, potentially up to 2 million small business owners that are not getting the support. Now, a couple of the really frustrating things here are that as a director of a limited company, you can furlough yourself, but you cannot work. If you were a sole trader, you can take the 80% grant and you continue to generate income, because you're allowed to continue to work. So the problem is that we've got massive disparity between all of these different measures. There's no consistency between them. So what I'm doing is urging everybody to write to their MPs, explain the situation that you're in, explain the inequalities between self-assessment, the sole trader support package, and the lack of support available to you as limited company directors. Ultimately, we're the guys that are taking the risk. We're creating employment. We have the option to furlough our staff, but we are faced with a risk of not having a business for them to come back to. If we can't get the support that we need to be able to continue to work and keep our businesses alive and planning for what we do when we get out the other side. I'm really, really hopeful that the government is going to come up with something to support this, but I get that it's really, really complicated. How do we identify those that genuinely need the support and those that don't? But it's a real problem. So lobby professional bodies, if you're members of IPSI, if you're members of IOD, if you're members of the Federation of Small Business, we need to be lobbying these bodies, and we need to be telling our MPs that we need help too. It's really frustrating. I'm certainly doing all of the things I can through my network to make sure that we're lobbying. There's a couple of change.org petitions that are going around, some of which are getting close to kind of 250,000 signatures on them. So have a look at those. If you go onto change.org and Google limited company director support, you'll find them, and look for the ones that have got the most signatures, because there's quite a few that are circulating, but there's one in particular that's kind of heading up to fairly sizable numbers. So they're broadly the measures that the government have announced at the moment. How can I help? If you are looking to use the business interruption loans, we have a corporate finance director in our team, a chap called Justin. His email address is there on the screen, justin@farnellclark.co.uk. He would be very happy to provide some guidance on how you put together an application, or indeed help put together an application. On our website, we are building a support hub. We're updating that as regularly as we possibly can. There's some very specific stuff there around HR and payroll. And the government support package page, businesssupport.gov.uk, is the most up-to-date and robust source of support for business owners. So keep an eye on that as well. These are my contact details. So we're going to do some Q&A in a moment, and I'll answer the questions I can. But if there's anything that you want to ask directly, not in such an open forum, feel free to get in touch with me. And if you're watching the recording, feel free to drop me a line, and I'll do what I can to help. So very happy to connect on LinkedIn. Email address there, will@farnellclark.co.uk, and our website there as well. So I'll take a breath. Thank you for listening. Keep safe and well, obviously. And if I and my team can help, we'd be very happy to do so. I'll hand over to you, Bridget, to coordinate.
Thank you very much. Thank you, Will. I really appreciate that. That's covered in an easily understandable way what is available, what the limitations are, and where it helps. We do have a number of questions already, because there's so many of us. If you could put your question into the chat, and then I'll call you up, and then you can ask Will directly. So Eve, you had a couple of questions that you put into the chat. If you want to unmute your mic and ask Will the questions, that would be the perfect time. I'm assuming that Eve is still on. Let's give her a moment to be able.
Hi guys.
Hi.
Can you hear me?
Yes.
Perfect. Hi, Will. Thank you.
Pleasure.
And that was great.
Thank you.
So I want to ask, if we have higher co-working space, can we somehow get help to pay for that?
The short answer at the moment is no. Because you're in co-worker space, I mean, we work in London. You are not the rate payer, so your rates is included in your rental payment. So it's if you rented your own office and you were the rate payer and you had a rateable value less than 15,000, then you'd be entitled to a £10,000 grant. Sadly, because of the way that you're working in co-working space, then there isn't any support available there. And this is really the big challenge for a lot of businesses, that it's not just our personal income, it's our ongoing business costs that we've got to fund here as well. So Hmrc's argument, or the government's argument, would be use your rate deferral, use your self-assessment deferral. But I know some of you guys are in startups and you might be pre-revenue, and if you're pre-revenue, then there's no VAT bill for you to pay anyway. And this is the real frustration. Certainly the benefit of some co-worker spaces that it's easy in, easy out. And if needs must, then you stop your payments, and you go and find there's going to be a raft of office space available come the other side of this. I'm sure. I mean, I worry for WeWork particularly, because they were kind of not in the best shape anyway, and I'm sure there's many freelancers that have stopped their DDs. Yeah.
That's a shame, though. I was hoping we can get some kind
Sorry.
of help.
right now, the answer's no. But things are changing so quickly that it could all change next week.
And Eve,
let's hope so.
You had a second question, Eve.
Yeah. So I did speak to my accountant about the company director's situation, and my accountant suggests me to do universal credit for company directors.
Yeah.
So is that suggestion correct?
Yes. So it's one of the things you can do. So the idea of universal credit is that it's been adapted to potentially provide around £1,600 a month of income for a household. I don't. This is my broad understanding, but then it's means tested. So we had a client ask us last week, I can't get universal credit because I've got savings, and their question was, can I put my savings into the company so I haven't got savings to then be able to claim universal credit? So the criteria is still very tight. It is means tested. Naturally, I didn't answer that question because that's kind of quite a tricky one, because it's still their money, albeit they've lent it to the company. If you can do an online application for universal credit, then it's a place to start. And if you're a company director, you've got this dilemma again in terms of you could furlough yourself, but if you're not PAYE anyway, then there's kind of no point, because you're not going to get anything regardless. If you're paying £1,000 a month in PAYE as director's remuneration, then you can claim £800 of that. But you've got to look at how do you continue to run your business.
Yeah, understand. Okay. That's my two questions.
Thank you.
Thank you for the help.
If you want to put yourself back on mute, and Geneviève, you're up next, and then we have Lynn. So again, if you have questions, if you just write them in the chat, and then we'll come to you. So Geneviève?
Sure. Yeah. Hi. Good morning, everybody. Thank you, Will, for what was very informative, but still complex for me, even though my head usually gets into more complex. So I did speak about a week and a half ago to NatWest around the CBIL. I wasn't really talking to them CBIL at the time. I was actually talking about the women's funding, which is again the Rose funding, which is really not really what it says it is. And she indicated that because so the Rose funding I didn't fit because the business hasn't, we're revenue generating, but we haven't gone and done any investments except me investing in the company. And or we also haven't gone for any loans up to now. So I was looking, do I get a loan now? But she said, because we're still going to be reporting a loss for last year, because my cost of it's a technology company, so my cost is obviously higher than my revenue. And that as such, I would, I feel like I'm in a between a rock and a hard place, because
Yes.
I don't know where to go to, and I don't have payee, because obviously we didn't want to put that burden into the company. We're not paying everyone on a regular basis. When the money comes in, you get paid. And then the other thing to add to the injury is companies based in the UK. I live in Jersey, and Jersey hasn't been able to take their finger out of their proverbial, you know what, up to now.
Right. Okay. So in terms of the business interruption loan specifically, the criteria is really tight. The likelihood is that you would have more joy getting standard finance that you might have been able to access pre-coronavirus, and in doing that you need to be talking to the tech specialists within the banks who understand pre-revenue businesses and will use different financial models in terms of how they assess affordability and what's happening. So I know we bank with Barclays, and Barclays have a tech team in their regional business team. So it'd be worth trying to find somebody that understands tech startups, rather than talking to kind of a general business relationship manager who will generally deal with, well, are you making profit? Is there sufficient profit to cover your interest cover, which is the kind of traditional way that funding is assessed. So you need to find somebody that understands it. Alternatively, look at alternative avenues. If you've got an accountant, we work with an organisation called Capitalize, who are a fintech business that work with accountants. They're effectively a finance broker, but they have access to 110 lenders. They've got at least half of the lenders on their platform that are using the business interruption loan providers. You could go onto their website, but I think they generally work directly through accountant channels, but you could ask your accountant to get in touch with them, or equally I can probably make an intro, but equally we've got Justin in our team as well. But I think
we'll be talking. I have to talk to Bridget, and then I'm going to be giving you a call.
Sure.
Okay.
Perfect. Well, we'll do what we can to help.
Because I'm a mess. I'm an American citizen also, so that.
We do US tax work as well, so we look after US expats. So there is, if you're a US citizen, there is some US funding that you're going to be able to access as well. Even though you're
I have a
non-resident.
I have a US company also. It's kind of dormant for the moment. So I will schedule a call with you after this. Thank you.
Great. But hopefully that answered that question for you.
Well, yes and no.
Sorry, I'm answering questions. I'm just not giving you the answers you want, am I?
No. You haven't given me a path to cash. So until I see a path to cash, I'm trolling for the cash, as they say. But anyway, I'll go back on mute. Thank you very much.
And now you can see why Will is my accountant for a decade. Because so wonderful, Lynn. You had a question, and then I believe Narissa, you'll be up next. So go ahead, Lynn.
Hi, thank you. I joined a little late, so I didn't hear possibly your comments around the eligibility for the basic government program. But because I was working for a fintech in California the previous tax year, I wasn't resident here, so didn't file a UK tax return. So if you don't have 3 years of UK tax returns, are you not eligible to apply?
So Lynn, what's your structure for the way that you earn your income in the UK? Are you a limited company, or are you a sole trader?
Well, I have a limited company. I made it dormant, and I signed a contract as a sole trader.
Right. So when did you start that sole trader contract?
In second quarter last year,
right.
May.
And did you file UK tax returns prior to that?
I have, because I've been UK resident for a number of years. I just happened to have one intermittent year where I was overseas, but the previous year I was in the UK and filed a UK tax return, and many years before that.
And do you have self-employed income on those tax returns?
Yes.
Yeah. Okay. The challenge we've got on the self-employed support package at the moment is we haven't had the detail. So literally all we've got is our interpretation of what the government have said so far. So when they announced the job retention scheme, it took them about a week to get the guidance out in terms of how we take the numbers. So because you filed a return, I'm assuming on your 18-19 there was no self-employed income at all, but there was on 17-18.
I believe so, yes.
Yeah. So it's a tricky one because arguably they're talking about averaging. So the criteria is that you filed an 18-19 tax return, you take the average of your self-employed earnings over 3 years, you were self-employed in 19-20 and you're continuing self-employment in 2021.
Yep.
So you meet all of that criteria. The only one that you don't meet is you had no self-employed income in 18-19. So it may be that what they would do, and I'm speculating until we see the full guidance, is that they might take your 16, 17, 17, 18 numbers and divide that by 3 to arrive at a number that they might pay you 80% of. But then again, the other criteria is more than 50% of your income has to be from self-employment. So you look at your total income and is more than half of it self-employment.
Yep.
Okay, so it's just that 18-19 year that might cause you a problem. And until we see the guidance, I can't say yes you will or no you won't. But they should be looking at what's going on. Now the other challenge, of course, with a self-employed scheme, they're not going to pay it until June. So at best, if you're going to get it, you're going to get 3 months paid in one go in June.
Okay, so is this the scenario where you have to wait and they're just going to tell you whether or not you're eligible? You don't have an application to make?
Not yet, no. So they're saying that, and again, the final guidance will confirm this, but what they're broadly saying is that you don't need to contact Hmrc. They are working through their systems to identify those that are eligible. Once they've done that, there will be an application at that point, and it will need you to tick boxes almost certainly to say that you have been adversely impacted by COVID-19 and that you're currently self-employed and you continue to be self-employed. But we don't know the detail yet. But there's nothing that you can do right now to get a yay or nay that you're going to get support.
Okay, thank you very much.
Okay.
It was helpful if I unmuted myself. Thanks, Lynn. Narissa, you're up next, and then Wendy, I believe you have a question after Narissa. So go ahead, Narissa.
Oh, hi, thank you very much.
Okay.
Sorry, I just put a message there. I don't think we can ask for any support yet. Business Ready pay by, the office that we rent in the, the what do you call, the whole building that they rent it to many companies. So I don't pay the business rate.
Yes. Yeah. Yeah. So you got no benefit there.
Because we try to push our launch for the mobile app soon. So everyone have to work. So I cannot ask the staff not to work. So it won't work for me either.
Yep.
Yeah. So I don't see anything that I can get the support yet.
So one of the things that you can do with furlough, so if you furlough somebody, they have to be furloughed for a minimum of 3 weeks. But what you can do is you can rotate it. So you could put somebody on furlough for 3 weeks, then you could bring them back and you could put somebody else on furlough. So you can kind of switch people around. So it may be that's an option. One of the other things that we're seeing businesses do is literally go to their staff, and you've got to make sure you do this right from an HR point of view, but ask staff to take temporary pay cuts. Again, you've got to have consultation, you've got to have agreement. But if you've got a bunch of loyal people, and you can work with them to come up with a plan where you go a month at a time, and you say, is everybody prepared to take a 20% pay cut? Then you've got scope to do those kind of things. But in terms of furlough, one of the things you could do is rotate people around.
So we need to work with the accountant who do the payroll, isn't it? So the accountant have to. So it'd be complicated to, I don't know. We have to see.
Yeah, I mean, it's getting the HR stuff done right. So you've got to write to the employees, tell them you're putting them on furlough. It needs to make clear what they can and can't do. But it does give you the ability to at least reduce your cost, because if you've got 5 staff, then if you put 2 of them on furlough for 3 weeks, brought those 2 back, and then put another 2 on furlough, then you're saving 2 people's staff costs each month or each 3-week period.
But 2 of them are on contract, not PAYE.
Yeah, so but if they're on contract, again, it depends what they are. If they're self-employed as sole traders, then they're going to be eligible potentially to the government support. If they're limited company contractors, they're in exactly the same predicament that many of us are in. So
the contract I have for 2 people, so I have to write to them to furlough or
you can't furlough anyone that's on a freelance contract.
Okay.
But if they're on a freelance contract, you can just stop their work.
I can't. They do IT development.
But you know what I mean. You could make that choice to say, look, we're going to have to stop for 3 weeks or whatever. But you've got to look at your circumstances and what's the impact of slowing down your launch, and so on.
Okay, so probably nothing that I can see that is too complicated.
And it's all subject to change. So keep listening and keep an eye on our website, and we'll be sharing stuff. And Bridget's more than welcome to share the stuff we're sharing over the coming weeks if anything changes.
Yeah, there is another business that I invested for 15 years. It's a retail. Well, retail, okay, Oriental supermarket in Hmrc. We pay business rate quite a lot, about 3,000 every month. Yep. So that one we can.
If the rateable value is less than £51,000, and again that's so if you're paying £3,000 a month, you might be higher than that, in which case you would get a rates holiday, but you wouldn't be eligible for the grant, because normally the rates are about half of the rateable value or thereabouts. So if you're paying 36,000 a year, then you've probably got a rateable value of kind of 70. So that would be too high to get the grant, but you will get the rate holiday, so you won't have any rates to pay. You'll save that 3,000 a month next year or this year.
But you mean holidays? It mean that we have to pay eventually?
No, that's a straightforward. You just don't pay. So there's a year's free business rates.
Oh, so we can stop paying the business rate for the whole year?
Yes.
But do we have to prove that the business being impacted by coronavirus?
No, not for retail.
Oh, okay. So what we need to do? We have to contact the
if you haven't had a revised bill, then I'd contact the local authority. And if the payment is due to go out on the 15th of the month, I'd cancel the direct debit for the time being.
Oh, okay. So I have to do that. So we save about 3,000 a month.
Yeah. Yes.
Oh, thank you. We can do it ourselves. We don't need to get an accountant to do it, right?
No, you should just be able to contact local authority to confirm it. But certainly, if they recognise you as a retail business, then you have got a 12-month rate holiday.
Oh, okay, thank you. That's lovely.
Pleasure.
Some good news at last.
Hey, it's only taken 55 minutes to get there, but we've got some.
But that one, I saw 2/3 of it. I still have like one.
Cool. Thank you, Larissa. If you want to put yourself back on mute. Wendy, you're up next. You have a question.
Hi, yes. Can you hear me okay?
Yes.
I will. Yeah, my question is as a limited company director, and I'm getting advice from my accountant saying that, I'm not an employee, and if I had to take advantage of the retention scheme, that I would have to convert to becoming an employee. and then I would lose the director's advantage of doing that. So I'm kind of getting mixed messages, because again, from yourself and also when this discussion, I've also seen on the news that directors can, furlough themselves. So I'm just confused as to what the potential impact is likely to be based on what he was saying.
So do you take a proportion of your income as PAYE? So do you take £800 a month, £1,000 a month, whatever it is as PAYE?
Yes, I do. Yes.
So yes, you can furlough yourself, and you can make a claim for 80% of the PAYE element. So you can't get any relief for the dividend element of your income. The challenge, of course, is that if you furlough yourself, you are then restricted in terms of what you can do. So broadly, you're not making it. There's an argument that if you're paid under PAYE, then there's an element of you that is an employee, albeit if we were going to get really technical on the legalities, there's debate around that. But what the government has very clearly said in its guidance is that when they announced the self-employed support package, they said this is not available to directors of limited companies. They should use the job retention scheme. So the government is expecting people to do this. So the challenge to make is, if you're paid £1,000 a month, the £800 a month you claim, you need to weigh that up against the fact that you can't do any marketing in your business for the next however many weeks that it goes on for. And that's really the decision that you need to make. There's nothing that is going to jeopardize your ability to continue to take dividends. And this is where the lack of any real clarity and guidance from government is causing problems, because everybody's interpreting it differently.
Yeah. In terms of activities, yes, there is the marketing has been going on, but we're also doing a large load of development because we're having to re-platform part of the solution. So with that as an activity, that could continue, though you're not selling it.
No, not really, because that's all
indirect.
Contributing to income generation in the future. So they're quite clear in terms of there's two roles you play. There's the officer role, which is your statutory director responsibilities and the things that you do as a employee in inverted commas, and it's the stuff that you do as a director in terms of filing confirmation statements, filing accounts, running payroll. They're the things that you have to do as a director. They're the things that you can continue to do while you're furloughed.
Okay, but I don't have to convert, because he was arguing that I don't have a contract as an employee with the company. So and he's implying I have to lose my directorship somehow, and then I lose other benefits.
Yeah, this is where everybody's going to have different interpretation. I've had lots of conversations. I'm pretty comfortable with the advice we're giving our clients. So some accountants, by their very nature, are very, very risk averse, to the point that sometimes that can mean that you miss out on opportunities. I'm not saying that's right or wrong. Everybody's got to make their own decisions. The government is trying to make it very clear that they're happy for directors to furlough themselves.
Right. Okay. Brilliant. Thank you. Thanks for your advice.
This unmute button. Thank you so much. Does anyone have any more questions? I'll give you one moment now to possibly ask.
Did we catch Nerissa's structures limited company 4 in PAYE 2 contract staff? Oh, we've done that one, haven't we?
Yeah. Yes, we did. So I think that's everyone. Will, that was brilliant. Thank you so much. I think we can all give you a round of applause.
Thank you.
Show our appreciation. This will be recorded and we'll get that out. You've got Will's details.
And then, if I can help everybody.
And then everyone who's registered for this webinar, I've got your email details, so I can then forward you on the relevant information that Will's company is providing. And obviously, if you don't want it, just unsubscribe. But otherwise, Will, thank you so very much.
Thank you very much. Great. Take care, everybody. Keep safe. Thanks very much. Bye.
Thank you.